We looked at individual traders or investors. And then briefly we went for trading platforms. Under trading platforms, we saw that these are places where different participants meet for trading and buying of assets. And we looked at examples of these trading platforms. For example, we looked at MT5, we looked at CIDA, we looked at MT4. We also looked at Trading View and sort of trading assets. And we looked at brokers. We looked at them as the intermediaries for the retail traders who connect us to the markets or who connect individuals to access markets. And the examples of brokers, we looked at DLive, we looked at the Hogo's Way, we looked at the Xness, we looked at interactive brokers, then synthetics, temporal brokers and pocket brokers. Then he led us through DLive account opening, how we can connect the MT, for example, the broker like MT5. Briefly, that is what we looked at. But these concepts, we still need to go deep into them as newcomers on the platform. But at least briefly, this is what we went through.
All right. So I'm going to mute you because I'm getting feedback. So on the side of brokers, something I've heard you talk about, MT5 is a trading platform. So whereas DLive or Delive, whichever way you want to call it, is a what? Is a broker. So briefly, yesterday it was an introduction. We let Muzei conclude with that. Then I will come back. Muzei, anything you want to add on onto that recap?
Not quite much because I think uh, Davis has covered quite a bit of that, except that he has rammed through. He has rammed through,
Okay.
and I think, yeah, but basically what he has covered is the outline of what we covered yesterday.
Yes. Yes. So basically, yesterday we started with knowing what is trading. So that's the basic. We wanted to know what trading is, and I hope Judy knows what trading is, as she's been a businessman for some years. So she knows what trading is. But on this other side of online, of course, we say trading is the act of buying and selling financial instruments such as stocks, bonds, currencies, and commodities with an aim of making profit. So that's basically it. Then we later on talked about types of trading. We said stock trading, forex trading, commodity trading, derivative trading, and we said we'll be basing ourselves mostly on derivative trading because we are looking at selling synthetic indices, which are the assets that are normally derive their value from the underlying asset. So that's what we'll be aiming at. And then we later on talked about synthetic indices, and we defined the synthetic index part of that. And then we later on said, talked about the key features of synthetic indices. I think that's where we stopped at. Uh, is it? I think that's where we stopped at, and I remember giving you homework on the, the the assets and characteristics. We even talked about the key participants in the synthetic index, and Davis talked about that. Most of those, the banks, the big corporations, the brokers, and then, of course, lastly, we, the retail investors or the retail traders. Yeah, so all that we talked about them yesterday. So I gave you guys the homework about trading assets, synthetic trading assets, and their characteristics. Did you guys actually do the homework?
Yes, we did.
So is it okay for you guys to, if you have something you can share, you can actually go to your WhatsApp and put it there if it is something you want to share. Then or you can actually from here share your screen and tell us, or and show us or tell us. Who is going first, John or Dennis?
Sorry, I haven't understood how you want us to do it. You want us to go to the WhatsApp?
And not really. I'm saying, and Muzey, I'm saying if you have the homework, you can actually share it here. You can share it here. It's fine. If you did some research about the assets, the trading assets and their characteristics, then you can start from there.
Okay, maybe later on I can type what I found out in the group, maybe, and the members can find it there. But right now, let me just run through what I caught
It's okay.
regarding the characteristics of synthetic indices.
All right.
As I was trying to research through this,
Okay.
I sort of was impressed that there are some general characteristics
Okay.
that distinguish synthetic indices from maybe the currencies, forex currencies,
Okay.
and then also there are other more specific characteristics between the between the differences of different indices themselves.
Okay.
For example, among the general characteristics of indices vis-a-vis any other instruments, I found that these are 24/7.
Yes.
Like they trade daily from Monday to Monday,
Yes.
24 hours, while others, like the currencies, only trade from Monday to Friday.
Monday to Friday, and they are not even 24 hours. You don't trade them 24 hours. They have opening hours, like the New
Yes.
York, they have sessions. There's a New York session, there's Asian session, then there is the London. So those have their times they will open the market. So you can't trade the forex all through 24/7. So that's a better research. Yes. Kudos. Jerry.
Thank you.
I hope
The other one,
that also of the sessions and what the London session.
yes, that's vis-a-vis the forex.
Yes.
Yes. Mm. Then the other one was the fact that by the nature of these synthetics, because they are simulated in terms of how can I explain it? The fact that they are not affected by regular market hours, and therefore the real world market, they are free from the risks that those markets present.
They are free from the risks.
Yeah, that
Yes.
those markets would suffer.
Yes, of course. They are not affected by news.
By news and some of those other things that affect the other markets.
Yes.
Although going forward, obviously, I will need to really know exactly how that looks like in the real market in terms of their real market.
Yeah.
Then the other,
yesterday we talked about that. We said they derive. Anyway, we're going to see it in the characteristics later on. We are going to see that. It's okay. You can continue.
Then the other thing I discovered was that when we are dealing with these indices, the synthetic indices,
Mm,
we are dealing with indices which drift very swiftly, and they therefore require us to be looking at the trends as we trade them because of that factor. The difference between the buying and the selling can be quite swift, which will mean that according to how I'm thinking, they will require quite a bit of attention when one is trading them. But also they give, therefore, the privilege of being able to select one who buys in a very strategic manner, but also be able.
They have lost you. Is it my internet? Are you guys hearing Mzee or it's my internet?
Indeed, he's lost.
Okay.
I am not hearing him. I don't know what happened to him.
I think his internet. And he's talking of great characteristics you guys need to know. Love his research. Mzee, are you there? Hello. All right. As we wait for Mzee, I will ask Davis. Davis, there's a feedback I'm getting on your side. I don't know what are
Yes,
you
please.
using to get to hear us or to speak. Are you using a microphone? Are you using earphones? What are you using?
I'm just using direct voice from the phone. I am actually using my phone in the office here, and I'm not having any extra gadget.
Maybe. Maybe you try probably change.
You are trying to find out what could have happened to this Yahweh?
Try to change where you're sitting.
Hello?
Try to change where you're sitting because I'm getting the feedback. I can hear myself when you're unmute. When you're unmute, I can always hear myself. So there's a feedback that is happening, and it's not happening with these other guys. When they're talking, I can still be talking. So and I'm not affected. So try to change your position and see if we can actually do away with that feedback that is on your side. Let me check what Mzee is on.
Hello?
Yes.
Is it now clear with you?
I think so. No, not yet. I can still hear.
Not yet clear.
Yes. I think even you still you can hear me 2 times. So there's that echo something. There's that interference of the what? That interference of the feedback. So, Mzee, you're back. What I think it was your internet. I don't know, but you can continue as Davis fixes. I think what is happening with the feedback.
I don't know where I had ended because I realized that I was talking to myself.
No, it
I don't know.
was your internet. You went off. You went off. So you were still telling us some of the characteristics, and you were on the one that has to do with I think you had ended the one for the market, how they open, when they open, and then you are on the one that is not affected by the common market of forex. I think that's where you are, if I'm not mistaken.
Eh. Then I went on to say that the other thing I discovered was that even among themselves, the different indices have got specific characteristics which are different from each other.
Yes, yes.
Some are more volatile than the others, and some, as one selects them, one has got to be careful about things like the lot size one chooses against their investment and things like those. But now those are much more on a uh, specific indices that I'm not personally acquainted with very much. But those are the differences I found.
Ah, okay. That's thank you, Mzee. That's profound. That's good research. So I wanted to know if Davis, you did the homework. I think you're going to wait for me to finish talking, then I can mute, then you can now present, because the feedback, I'm thinking it's not going away. I don't know what happened to your phone yesterday. It didn't have that, but yeah, you're going to work on that. You're going to share what you research, then we'll get into that. But briefly, because I think I'm seeing time is rushing. Wow, time is rushing. So in just around 2 minutes, if you can share your research, and then we can get back to more of what you guys have not shared. All right, go ahead, Davis.
Okay, sorry, incidentally, I was unable to make some research yesterday. I had a number of issues, and really, to be sincere, I didn't carry out research on this, on the assets and characteristics. And I request you to pardon me so that I may proceed and learn these assets also and their characteristics. But sorry for that. Next time I will not fail to make research about the homeworks.
All right,
Thank you.
it's fine. It's fine. Let's now go ahead. L- Kindly mute, Davis, because I can hear myself. Okay, so synthetic indices, like we said yesterday, these are financial instruments that are designed to track the performance of a specific market index or a basket of assets without directly holding the underlying asset. So that's what we said. And let me again share the definition in the group. I mean, in the chats here, and so that you can always check it out. So that's what we are on. I've pinned it. Synthetic indices are financial instruments designed to track the performance of specific market index or basket of assets without directly holding the underlying asset. Um, we You will realize that this definition, it means that any synthetic index you see, there is an index out there that is actually in real market of that this varies in the synthetic index they've created or they've designed captures its value from, or captures the performance from. So it captures it in a way that after that it somehow the computers make an algorithm that follows exactly what the other index is actually having. So they capture for years the data of years of that very index. Then they use that data to now create a synthetic index like say Boom 1000, uh, Boom 500, or um, which one? The crash, the volatility 75, the volatility 50, all those. So there is always a certain specific market index that is having almost the same data because uh, uh, these very synthetic indices are designed to track the performance of the real market indices that are there. So um, but be assured that once that those indices are not actually disclosed to us by Deliv. They have their own. They have that information was retained, so we don't know what Boom 1000 actually follows or tracks the performance from. We don't know what Volatility 75 tracks, but the way their movement are, if you went to check on all indices and looked at their performance, you may actually realize that some of those indices um, are actually having some similarities with these other synthetic indices that we trade, or that will be trading in the sense of I mean, in the aspect of Davis, who has never traded before. This brings me to a question that I forgot to ask Judy. What experience do you have in trading? Are you a beginner? Do you have any knowledge about trading, or you've never traded before? Sorry, I forgot to ask this question, so I need to know so that we can understand when I'm explaining.
I can say I can say I'm a beginner because most of the things I don't know have been jumpy.
What have you been trading? Forex or synthetic indices?
Synthetic. I've never
Synthetic.
tried forex.
Oh,
I've
all
never
right.
tried the currencies.
All right. Okay.
Yeah.
All right.
Mm.
So, a beginner, how long have you known trading and how long have you engaged yourself in trading?
I've actually, let me say, my husband trades,
Okay.
so it's from him that I've been checking, but I've never been serious.
Uh,
Maybe 2 years, but I've never captured.
mm, do you have an
I've never.
account? Do you have an account
Yeah,
with
I have.
Deliv? All right.
I have.
All right. So, hey,
Mm,
that means
I'm not disciplined.
that means you're not so green as our brother Davis.
I may say so, but I'm greened because I don't know most of the terms. I,
It's okay.
yeah.
It's fine. It's fine. We will look into that. All right.
Okay.
That's it. It's okay. You can now mute. Now, that means um, we are going to be looking these very things deeply. All right. So, um, knowing what synthetic indices are, now the characteristics. Now, um, they, of course, as usual, there is always the leverage. Now, I'm going to talk on some of these that Mzee has not talked about. Um, I don't know if you guys can tell, or do you have in the common world, do you understand the word leverage? Anyone who has an idea on what leverage is?
In the common language that we use,
Hmm.
I think I have seen us use.
Mzee, we've lost you again.
the word leverage. You take advantage of
We-
more
we-
advantage because
We
it was
lost,
available.
Mzee, we lost some words. I think your internet is not stable.
Hello?
We lost some words.
Oh, I was saying
Yes, yes.
that in the normal language, the word leverage is used to mean something that one takes advantage of because it is there
Mm,
to create more advantage or to create more value.
All right. Thank you, sir. So in this kind of world of trading, leverage refers to the use of borrowed capital or financial instruments to increase the potential return, just like Mzee has said. You are looking at borrowing capital to increase the potential return on an investment. So, in other words, leverage allows investors to control a large amount of an asset with a relatively small amount of their own capital. I want to repeat so that this definition kicks in to everyone. It simply means when we talk of leverage, we are simply saying we borrow capital to increase the potential return on an investment. In other words, leverage allows us or um, traders or investors to control a large amount of an asset with a relatively small amount of their own. So say I think those who have accounts, Muzei and Judy, when you are opening the account, there's a point where you were told to select to choose your leverage, the leverage of the account, and you had leverages of like 1 to 500, 1 to 100, 1 to 5,000, or 1 to 1,000, something of sort. It is a ratio. It's a sort of a ratio. Did you did you guys get to see that?
Yes.
Judy, did you get to see that?
No, my account, it's Moses who opened it for me.
Ah, all right. So a leverage, in just in layman's language, is just basically that. Uh, for instance, let me see. Let me see. For instance, if you have a leverage account of 1 to 400 or to 500, it means for every $1 of your investment, you are capable of making $500. Are you understanding that?
Mr. Coach, I beg your pardon. What you have just said, I didn't pick it well.
Leverage,
Leverage.
just for an
Just
example.
for an example.
First mute because I can hear
First
myself.
mute because I can.
All right. So I was saying leverage, as how we've explained it, the definition, how Muse has explained it in the common world, and how I've explained it in terms of trading. We are simply looking at borrowing capital to increase the potential return on an investment. That is leverage. So you are borrowing money from the broker or the bank and entering positions, but your own investment is so little that you're going to use, actually, you're going to risk for. Yet in return, you're going to make even more than what you have. You understand? So here, for example, if you have a leverage account that is 1 to 400 or a 1 to 200, it means if I have a leverage account of 1 to 200, it means for every $1 of investment in my account, I'm capable of making $200. Are you understanding that? Let me
Yes, please.
let me check here. I see if I can get some more light on this for you guys. I hope it will be clear for you guys. Save. Okay, just a minute. All right, so something I'm sharing on the screen right now. I want you guys to be able to see it. Are you seeing it? Hello?
Yes.
Hello guys.
I'm not seeing it.
Hello? There, are you seeing what I'm
Yes. Yes, we are seeing it.
All right. So now these are accounts in the leaf, and if you look on the second tab where there is leverage, you can see what I'm talking about. There is 1 to 1,000, the Vicent and Grenadines, the British Virgin Island, the Vanuatu, the Ruban. So when you are opening these accounts in the leaf, most especially the standard ones, you were given these options. Now, under leverage, you can see they've put dynamic leverage. Means it can change. You can change. You understand that? You can change. You can change. And these down here, they're saying these are financial accounts under the leave SVG. So these are the leverages. It means for everyone, for an investment of $1, your position of $1 can actually give you a return of 1,000. That is what that leverage means. I hope we are now clear on leverage.
Yes.
Yeah.
Any questions on leverage, Davis? Are we on the same page? Davis, are you there? Davis, you having an issue with your phone again? Hello? Okay, I think Davis is busy, so let's move on. But that is it. Judy, you have any question?
No. We can continue.
Yeah. Musei, any questions on leverage?
It's clear, except did you say that it's the broker who provides us this leverage?
Yes, yes.
Okay.
Yeah.
Okay.
All right. Let's now move ahead. Stop presenting. So, now that we've known leverage, we go back to our characteristics of synthetic indices. So first was leverage. So we said derivatives and CFDs often provide investors with the ability to gain exposure to the underlying assets using a small amount of capital, amplifying potential gains and losses. So even that point you need to note it. It's with leverage, there is a possibility of amplifying your potential gains or profits, even losses, because you're using the same leverage. You can't change the leverage of losses and even have the different leverage on profits. It's the same leverage that you use because it's the leverage of the account. All right. So I want to repeat that point under leverage. Remember, we are under characteristics of synthetic trading assets. So we are saying under leverage, derivatives and CFDs often provide investors with the ability to gain exposure to the underlying assets using a small amount of capital, amplifying potential gains and losses. So, is that point clear? Are you guys, were we on the same page? I want to go as slow as I can.
Okay, Mr. Coach, I think I've not picked well the concept of leverage. Apart from knowing that it is the borrowed capital to boost or to increase the potential return on the investment, I've not understood more about it, especially the nature of characteristic.
Imagine a first minute. Imagine you going to a market. Imagine you going to the market, and then you have probably one tomato. Just let me take you back in the days where barter trade was happening. So imagine you had one tomato, and you are probably going to auction it, and people are going to even give much money than what you should be getting. You are actually selling it off at a higher price. You have one tomato, you may end up getting, with the price they are going to buy, you may even end up buying the whole basket of tomatoes. That's what we are looking at. You have $1 that you've invested, but you have that $1 that you've invested with the leverage that the broker offers. You have the ability and the capability for you to actually make more than what you've invested. It's not like let me call it how you see, the principles of betting. You know how betting works. Do you know how betting works?
Incidentally, I've not been betting. Maybe this is why
And
the trade is not.
how betting you have
Yes, I know it makes profit and losses.
You stake a game, and then you say it's going to win or lose. Once it wins, your money is amplified depending on the I've forgotten the word. Depending on the hey, what is the word? There's a word there that is attached to those betting guys. Depending on the odd number. You understand? So the odd number is like the leverage. You most of the times you see 1x or what. I myself, I don't bet. But I've ever seen the platform where they do the betting. So that's what they follow. If it has, if your odd number is more than one, it means you get that more than that number, then you multiply it by your investment. Are you understanding? So, for example, if your odd number was when you're betting, if your odd number was probably 5, and you had made a prediction of winning, and what you predicted actually came right, then you would get that 5 times your your initial investment, and then you get the amount that you're going to get. Now, with leverage, it's almost the same thing, but in a way that you have control. You have control. You can say, me, I will only take this. Once it hits this level, me, I will go out and make money. But you have the capability of you even making the amount they are showing you here, 1 to 1,000, meaning $1 can give you $1,000. There is a capability. That is the leverage. That is how far your $1 investment can give you. You understand? Your $1 investment can give you that much, but you have control in your hands that you can say, no, I will take, 50, I will take $5, I will take $10 if I see profits, or I will close out once I see a loss of maybe $5. You have the control. Whereas in betting, there is no control. You understand? You lose, you lose. You win, you win. It is all in, all out. You understand? I hope I've made it clear. I don't know, Davis, are you with me?
Yes, I'm picking the idea now.
You're getting it. So there's leverage is the ability to amplify your profits or your returns. It's the ability for you to amplify, and that ability is given by the broker who offers you the account and the liquidity in the market to trade. So the broker that you choose gives you the leverage. And just as how I shared, I don't know if you were able to see the photo because I came back to you, you were mute, you were not saying anything. But let me share it again and you'll be able to see the leverage there. Now these are different accounts. You may call them servers, but of that account, financial account, it's a type of account under the leaf. These they handle currencies. Financial account, it handles currencies. Now these are, you may call them servers of this account. So there are different servers there. So the St. Vincent and Grenadines, it is showing you that the leverage is 1 to 1,000. This is one. The British one is showing you 1 to 1,000. The Vanuatu is also showing you 1 to 1,000. But the Libuan is showing you 1 to 100. You understand? So and you can even see the number of assets under those very different servers, or call them categories, that you can actually access. So that's why you need to know which one you have to choose. Here you have the ability to make more money than the Lubano. The Vincent Grenadines is you're likely to make more money than this very level. But of course, we in terms of forex, you can see under that leverage there is spreads. Now, for spreads, I'm not going to talk about it now. I may confuse Davis and anyone who doesn't know about spreads. But yeah, there's also that to consider when you're talking of forex. All right, but that's it. You're looking at using a small portion of your investment to make more money because of the leverage the broker gives you. Are you understanding that now?
Yes, coach, but let me ask you a question.
Yes.
How much does the broker love me to be able to give me that sort of loan? Because I am imagining that obviously it's also in his interest.
It is in his interest because you will never win. A few can win consistently. Consistently meaning you can win 10 trades, 20 trades without a loss. It's very rare. You understand?
I do, but that would mean also that if I lose, for him, he gets away his money before he loses it. Is that? I don't understand how it works, because I would imagine that he's also putting himself in a very big risk, because what if I don't know what I'm doing and I blow the account?
If you blow the account, for them they are making. They make every trade you place, they are making. There is a commission they make.
Mm.
You understand? For them
And
they
if I
make.
blow the
Whether
account,
you
the money
lose
goes to
or
them.
win, whether you
Mm.
lose or win, for them they are making money.
Yeah, I think I understand that.
Yes, yes. All right. Any questions on this very level we are on? Davis, are you with us? Any questions? Davis, are you there? What happened to Davis? His mic is having a problem. His phone, because I don't want to leave this thing and then I come back when he's not um, when he has not gotten it yet. Davis, are you there? Please, if you're there, unmute and talk to us so that we can move ahead.
I think his phone might have a problem or something.
Because time is rushing and we haven't. Okay. Davis, if you're hearing me, please.
Yes, please. Now I'm back on the platform. I think my network was disturbing.
So have you
Hello.
gotten what we are saying about leverage? Because I need.
Yes. What I didn't understand was how the broker determines the leverage for the investor. How does now a broker determine? How does he determine the leverage for the broker, rather for the investor?
They have their own systems set. So when you're opening the account, you choose the leverage you as a person want to go with on your account. Just like how I've shown you in that photo. If you want a smaller leverage of 1 to 500, you go with that very account.
Oh, okay. I think I've got it now.
So it's about you to choose. In other brokers like Exness, you have the ability to choose your own leverage. They have options 1 to 500, 1 to 100, 1 to 1,000, then or 1 to 5,000. Mostly it stops around there, 1 to 5,000. So
Thank
you choose, you make your choice depending on what you want.
Okay, thank you. Thank you.
All right, I think now that's clear. Let's now jump to another characteristic. So the other one is flexibility. So under the characteristics, we've started with leverage. We've known what leverage is, what it does. Then flexibility. Synthetic instruments can be customized to track a wide range of indices, sectors, or asset classes, allowing investors to tailor their exposures. You within these instruments or these indices, we have there are many. You have the ability to move from one to another until you get to actually what does what works for you, what is actually giving you money, what you're comfortable with trading. Some people are comfortable with the crash and booms. Some people fear it like nothing. Then some people are comfortable with jumps. Other people fear jumps. Then somehow almost everyone loves volatilities, but not all volatilities. Some want volatility 10 1s, Some want to trade the other end of the ones which are highly volatile, like volatility 75. So you have you have that flexibility with you when you're trading these indices. You can choose to um, go with whatever you want, and make your own trading plan basing on what you've seen that works for you according to your own strategy that we'll be talking about. So at number two, that is flexibility. Then we have liquidity at number three. Um, Liquidity. Do you guys know what the meaning of liquidity is?
Liquidity, can I take it to be solid, like solid cash, or turning an asset into cash?
Mm,
I don't know in Raymond's language, but liquidity appears to be like selling off an item or like a property, then you turn it into liquid cash.
yes, that is, we are basically looking at the amount of cash or money that is in the market for that very asset. You understand? So we are saying synthetic index products such as ETFs, CFDs are often highly liquid, allowing investors to enter and exit positions efficiently. It means there is always enough money, there is always a lot of money within these markets. Are you understanding? There's liquidity always available for for investors to always enter and exit and make money like that. Are you understanding? So if there's no liquidity, it would be hard for anyone to enter the market. If there was little liquidity in the market, then it would always be hard for people to many people to make entries and exit. You understand? So the liquidity in the market is what makes people enter and exit the market quickly, like in seconds, in milliseconds. You will realize that if there's little liquidity, the order, most of the times we use entry points, and I mean entry or sales and what have you, but the real language should be the order. When you make a sale, it is always called a sale order. It's you're ordering to sell that asset at a certain price, and you realize that it happens in just milliseconds. You place and it goes immediately there. But it is an order, a market order. Now, if there was no liquidity, that order would actually delay, and it will come later on after the market has received liquidity, or someone has sold off and now the market has money. Then it allows your order to go through. I hope now you're understanding that.
Yes.
Yes. So liquidity, enough liquidity in the market helps all these orders to go in an instant, to go immediately. So that is one of the other characteristics of these assets, that there is enough liquidity to allow investors or traders, retail traders like us, to efficiently enter and exit our positions in the market. All right. Now I want us to, if we have no questions on so far what we've talked about, or if there is a query you want, you still have that so far what we've talked about, you have a question you want to put out, please do, because as of now I want to shift to something that is even bigger. that will now open our minds, that is more practical, and then we start from there. Now, after this, the session of words, a lot of words is almost ending. Any questions? So on top of what Musei said, I hope you guys noted all that Musei said. If you didn't, then you have to go back to the video once I share it later on in the day, so that you can be able to do what? To hear what Musei said. Those are the other characteristics of these synthetic indices. So whatever Musei said, you need to know them so that you're on the same page with us all. I hope you did that. If you didn't, then you will have to rewatch this message and have all those that Musei talked about with you under the characteristics of these synthetic indices, because you need to know them. He talked about volatility. It's a big aspect. It's a big characteristic in these indices, in these instruments, compared to what we see in the forex. Um, you have assets like volatility 75, volatility 25, 1S, volatility 51S. All those three assets are highly volatile. Then there is also volatility 100, 1S. Those are highly volatile. You need to know them, that they are highly volatile, and so that you can be able to understand which lot size you actually use on them. You understand, depending on your account. So you don't want to find yourself trading volatility 75, but you are on a lot size like 0.05 or 0.1. My dear, it will blow the account just in seconds if you're found on the wrong side. If you're found on the right side, you may triple your money without knowing even. Because that's how volatile some of these assets are. Whereas there are also these other assets that are not volatile at all. Well, assets like Jump 100 is not volatile. Assets like Volatility 25 is not volatile. Then assets like Volatility 150. I last traded it long time. I don't know if it is still the way it was, but it was not volatile by the time I last traded it. Yeah, they leave normally she makes changes of these assets, but you need to always first understand before you can quickly enter those assets and trade. All right, I think having said that, and having not seen any question from you guys, I want now us to jump to what we call um, trend. No, we are going to technical analysis. I want us to now jump to technical analysis. This is going to take us some time, so I want your attention. And if you have your notebooks, please get your notebooks, and we are going to go into technical analysis. Now, under technical analysis, we're going to start with basic chart types. We're going to start with basic chart types. Now, chart types. What chart types do you guys understand? What chart types do you guys know? Are you guys there, or I'm talking to myself?
We are here. I'm personally thinking about what your question is asking, because
Chart
I don't.
types. Chart types.
Yeah, I've heard the word chart types, but in my head I'm blank. I'm thinking chart types. What what are these types?
I think there is can- candlestick,
All right. Yeah. Kudos. Kudos.
um,
Kudos.
bar.
Judy. You know.
I think bar type.
All right.
Um, I don't know. Just I
You're
think
on
I
the
know
right
those
track.
only.
Continue. Which other type do you know?
Just those.
All right. All right.
I've
Now
understood what
you're
the question is asking,
chat type.
coach. I think yeah, the other one is the line one. Now you know what the question was asking.
Yes. Line chart. Okay. And do you have any other ones you know?
There are
No, no
some I
candlestick
saw on
line.
the, I don't know, is it horo? Is it horo type? Something like that. HORROW?
Follow.
Or
Um,
horo? Something like that.
I don't know if there's a trading platform that has that. I don't know about it, but
Yeah.
we'll check and see. Holo. You've called it Holo. HO.
HORROW?
Holo chart type. Chart type. Let me check. Let me check here. I see. Let me check here. Ah, you're meaning these ones which are not having the solid body. Yeah, I get you. Yes, yes. Yeah, hollow candlesticks. We
Yeah, though I don't understand their roles and how they function, but I just fixed just the name.
we are going to look at that. Look at that. Yes, yeah. That's it also. Okay, right. Everyone knows something about the chart types. So let's look at them in detail. Um, we have several basic chart types that we use to analyze and visualize price movement. Basically, a chart type is something you can use to analyze and visualize the price movement or the market data. So that's what we are going to be looking at. And the common types at number one, we had line charts. And now you're going to allow me share my screen with you, trading view. So you're going to see something here. Trading view, I think so. Yeah. So on your screen, you can see my chart now. Under here, where you're seeing where I've put my cursor, I can now drop down and go to the line chart. Now, this is the line chart. It means if I go to analyze or if I go to the market and I see a chart like this, I can easily use this chart to analyze and understand what market is about to do or predict the movement of the market price. Are we on the same level? Davis,
Yes.
are you getting
Yeah.
what I'm saying?
Yes, yes, I'm watching.
Yes. So line charts display the price of an asset over time as a continuous line. So you can see this is a continuous line with it has some corners. I may not say corners, but joints where it makes a turn like there. It makes a turn and goes down and makes another turn, goes up like that, like that. So here we are saying they display the price of an asset over time as a continuous line. Um, yeah. The other component of a line chart is to understand that um, we can actually use it. Me, I normally use it. Sometimes I use it comparing it with other charts like the candlestick chart. I can easily use it. Now, for instance, we will see this later on, but for instance, there is a strategy we call heads, we call double bottom and double tops. We will look at that in the chart patterns. We will look at that in the chart patterns, which will be like tomorrow, probably. Tomorrow we may start chart patterns. But if you look at that, this is a clear double bottom kind of pattern. If you know how the double bottom kind of pattern looks like. So if I know this, then I know that my entry would have been here. I would have made entry around there and I would have made all this money there. Are you seeing that? All this would have been money to make all the way up there. So just using the line chart, you can still make money. You can analyze and see, oh, price has done that, so it has been rejected down below here. So that means price is now going to reverse into the uptrend. That is how you can use the line chart to analyze. Are you seeing that? Then where there is a lot of zigzag, or if I may use that word, or a lot of uh, uh, joints and what have you, then you'll be knowing then it's a ranging market there. Price is consolidating. You understand? Then a breakout, fake breakout retest, then it started to break out for real into the selling. So you can actually also use this to do what? To analyze. That's why we have to look at them so that maybe probably in future you can look at that. Let me now uh, change before I can remove that. Let me change to candlesticks and you'll see that. Are you seeing that? Where our double bottom was? Are you seeing that? I will bring these very examples in the course in, when we start the chart patterns. You'll be able to see that. So you can see how that move was and how that trade was very effective. That you could have taken it using the line chart there. You can see. All right, and of course, using the hollows as how Davis said, it's still the same thing. It's only that on the buy candles, or the buy candles are not having the solid part of the body. It's hollow. It's a hollow part. All right, so that is so far what we can say about line chart. This is line chart that we are talking about. So at number 2, we have bar chart. Any questions on line chart before we can go to bar chart? Are we all good, or my internet is off? Are you guys there? Can you hear me?
Yes, we can. Loud and clear.
You're becoming too silent for me, guys. It's
We are
all right.
listening, please.
Yes, yes. So, any questions on line chat?
No,
Maybe what I can ask, when do you choose line charts and other alternative charts? When do you decide to say, let me use line charts or another alternative?
It will depend on the strategy you are using to trade. So it will be
Mm.
upon you to say, I think I'm using probably I'm going with double bottoms and double tops, and line chart normally brings it out clearly and faster for me to understand there is going to be a double bottom or a double top. Then probably I can always switch from candlesticks to to line chart to confirm. But what is widely used, or what is commonly used in the market, is Zori's candlesticks. You understand? So this is to just show you you can actually here on the line chart, it can easily show you the momentum of the asset. You can actually determine the momentum of the asset, how, if the market currently is volatile, or if it is ranging, or if there is low momentum for the buys or there is high momentum for the sells. When you switch to line chart, you can easily determine that. Now let me show you another example here. Are you seeing here? Are you seeing here?
Yes.
Now this can easily show you when you change to line chart, you can easily see that this was actually consolidating. Now after consolidating, price broke out and kept on buying. Now if I change to candlesticks, you will see that clearly that it was actually consolidating. Are you seeing that? Are you seeing that? Consolidating, it means it's ranging, or it's not decisive. It is not deciding. Each the buyers are pulling, the sellers are also pulling, so no one is having more momentum than the other. So the momentum is almost the same in the market of the buyers and sellers. You understand? Until the buyers got enough momentum and broke out and kept on buying, until sellers also came in when price reached that level, and we call that level resistance level. So we'll talk about all these. We'll talk about all these. So all this is part of the analysis. Are you understanding that?
So
Yes,
when
sir.
you're using the line chart, it's difficult to tell the buyers and the sellers.
Yes, it's difficult, but it can tell you that actually there is low momentum in both sellers and buyers. And when you change back to candlesticks, you can easily tell, okay, the buyers are
Also,
good.
when you're using this line chart,
Mm,
it's better to use both the line chart and the candlestick.
exactly, to always refer from the other side. So
Mm.
you could see here, I couldn't understand that there is a resistance here until I
Yeah,
changed to candlesticks. You
candlestick.
understand? So
Mm.
you need to always refer if you're going to use line chart. All right. Any questions so far? I want to go to bar charts. Bar charts, they are always. Something you need to note. On Whenever you see this point, whenever you see, let me zoom in. Whenever you see a point like this, where it makes a turn, where it makes a turn, just allow me take this call 1 minute and I'll get back to you. Yo, yo, Solegan. Waiting ne plan. Storage kolebuzi. Instead the boss nakababo ne conference nayo basoya ya church nkabasoya mbere nkokola biwa. Kunakubuuliza otanga gambe. Banji? Kunakubuuliza ebya gathering nko kubyahwire otagambe WhatsApp. Storage, plunge. Talk to me. Talk to me. Suti. Kanywani, sente ziri kwija. Ali boss. Oge. Bisi mukamaliriza muteya hati. Omushakanga akagumizamu yayanga.
Hello.
Okay. Your guy, kankuleke nakyali mu meeting.
I think he's taking a phone call, he said, then he'll come back.
Okay.
Sawa. All right. So I was saying when you see a point like this, when you see a point like that on the line chart, that is the close of the candle on the candlestick. When you change to the candlestick, that's where the candle closes. Always those points on the line chart represent the close of the candle, depending on the time frame you're on. So if right now I'm in daily or 24 hours, so if I see that point, it means the other side, the day has ended. This is where the day has ended. This is where the day ended. This is where the day ended. Are you seeing that? Are you understanding that? If you're using
Yes.
the, it's when the day ends. Whenever you see something like that, it's where the day ends, depending on the time frame. So if I go to H4, it means like on this level, it's where my H4, my 4 hours have stopped at. Are you seeing that? It's where my 4 hours have stopped. Let me make it smaller. So if I change to candlestick, you will actually see that that's where the candle, the red candle, I mean the green candle stops. Now, let me talk about briefly the candlesticks so that you guys can understand for purposes of who of Davis. Now, candlesticks are like this. Now, candlesticks are in this kind of form. We have the body. We have the body. This is the body. That's the body there. Then we have the wicks. These are the wicks. What is the spelling of the wicks? Okay, I've remembered. Wicks. These are the candlestick wicks. And then now after knowing that, then we need to know where is the opening price, where is the uh, closing price. Now for this, we are going to take this as a buy candle. Now let me change its color to green. Let me change its color to exactly that. Now, if we have this as our buy candle, now we have our opening price down below here. This is the opening price. Opening price. This here. I want you to note where the, let me actually use this. So that is the opening price, and this here is the closing price. Are we so far together, Davis?
Yes, sir. Yes, sir. Yes, sir.
Closing price. So that's the closing price. I hope you guys, Judy and Musei, you already know this. Do you, or it's new to you? It's the first time you're getting this information.
No, that
Yeah.
much I know.
Okay, right. So Judy, how about you?
Yeah.
You know, yeah.
The
So
closing price.
So this is our opening price. On this other side, closing price is there. Whereas on the other side of the sell, it's vice versa. the sell candle. I hope you know already that. So if I have the sell candle, um, I have my wick there. I have my wick there, and I have also the other wick here. This this here, this here is my opening price. And this here is my closing price. Are we on the same page now?
Yes.
Yes, sir.
Davis, are you there?
I'm there, sir.
All right. So it means if this was an H4 candle, if the previous candle probably stopped on this level, if the previous candle probably stopped on this level, if the previous candle probably stopped on this level, then this other second candle, this candle here, the another candle started on that level. It means price shifted to there and it started there immediately. Now, it started there, then once it started there, it went first up, it sort of went to buy, then it later came down and started to sell. Then it made this, then it went all the way down below to meet the previous low of this very candle. Then it later started to come back, then it closed on this level. Are we understanding that? Davis, I hope you're understanding how all this happened. Are we on the
Yes,
same
sir.
page? All right. So that is so far how candlesticks work. I wanted to first show you this before I can confuse you with this. So when I say this on the line chart, when I say if I change to line chart, this represents the close of the candle. This is what we are meaning. Here, if you see this, then you will know that this is a sell candle here, or it was selling. If I change, oh, sorry, I don't know what I've done. We're here. So if I change here to candlestick, then you'll be seeing that this was actually a sell candle. And you can see that the close is down below, just how we've seen the closing price is here. So line chart always follows the closing price of a candlestick. So if I was to draw, let me give you an example of this. If I was to draw a line chart of such a move, I would start from here. This is the close. Then I would come like here. We are looking at where there's a close. Sorry, to delete that. If I was to draw a line chart, so I would start, this is the close, that is the close, then that is the close, then the close, then the close, the close, then the close, like that, like that. That's how price was moving. Then the close, then the close, like that. So if I stop from there and I change my thing to line chart, it will almost look exactly the same. Are you seeing that? This is mine.
Yes.
This is mine. moved.
You have enlarged it too much. It's covering the screen.
Which one?
You have zoomed in or zoomed out too much that I can't see where your cursor is moving now on my screen.
It means your phone probably, because mine I haven't done anything. That's how I've been. Are you guys having the same challenge? Hello?
Hello.
Are you having the same
Yes.
No,
challenge
my
as that
screen
of
is
Moses?
okay.
Yeah,
Yeah, we are
I
not
think it
seeing
is
the
on the side of
cursor.
Mosei.
Hmm? So the-
I think it is on the side of Mosei. Mosei, probably what you
so-
can do is to move out and come back, probably to be sorted.
Okay.
Yeah. So I think you guys have seen it is almost what I've drawn is almost matching with what is actually happening because of the clauses. Because of the clause, if I remove it like that, you can see that the movement is almost the same. Look at that. Look at that. So it captures the clause of the candle or of the time frame. So it always captures the close of that very time frame you're in. When that time frame ends, it marks it. That's what we've just confirmed here. So if I put it back there, you can see it's almost the same, because here I missed some point because the candles were very small. But looking at that, that's what it was capturing. Exactly the same thing. So I want you guys to have that at the back of your mind. We have around 5 minutes. I want to use those 5 minutes to capture the rest of the chart patterns, chart types. We have the bar chart. This is the bar chart. This one actually clearly shows you the open price, the closing price immediately. So for the line chart, you can see that this is the open price. I don't know if I can enlarge it. Let me see if I can enlarge it for you guys to understand the bar chart. Now, looking at this, I want you to focus on only this. I want you to focus on only that, only this candle here, only that candle there, this candle in between here. So we have this as the closing price here. This, I don't know if it will be able. That is where the closing price is. That thing, that bar there, that's where the opening price is. Then we have the closing price there. We have the closing price there on that bar there that comes out. That's the closing price. And on the other side of the sale, this is the closing price. This is the opening price there. So it's almost the same as candlesticks, but for them they clearly show you the opening and closing, and then the rest is the stick only, the price movement only. So I think that's it for the bar chart. Any questions on bar chart? They clearly show us open price, the higher price, the low price, and the close price. So you can term it as OHLC. OHLC. Open, high, low, close. Open, high, low, close prices. Open, high, low, close prices. Meaning open price, high price, low price, and closing price. Are you understanding that? OHLC. OHLC. OHLC.
You said C stands for what, please?
Close or closing price. OHLC. Open, high, low, and close. This is the open. This is the open like I showed you. This is the open like I showed you. This is the low. Cancel. This is the low. Then if I can remove this, then this is the high. That thing on tip there, that is the high. Then this is the closing price. That bar that is going this other side is the closing price. Are you understanding now? OHLC. We have the opening, then we have the low price. I mean the high price, then we have the low price, then we have the closing price. The high, the one that is on top there, the high. Are we on the same page now?
Yes, sir.
All right. So now we look at area. These I've never used, but of course we have other types like the area. The area looks like that. The area looks like that. So it has the line chart, but then having the shaded. The shade will somehow show you the momentum of the asset. So that's the area. The area chart displays the price of an asset over time with the area below the line filled in, creating a shaded area. The area chart often used to highlight overall price trend and the magnitude of the price movement. So that is exactly what we can see on this other side. Very few people use it, but we can always see it used in indicators. Some indicators use such kind of plotting to understand the volume of the asset and the magnitude. So that is as far as we concerned the area chart, and then the last what I have here. The last one is the baseline. It's almost like the area, but it has that baseline there, meaning you can see this one easily shows you that price is oversold here, right here, down here. When it goes down below there, it clearly shows you price is oversold. And most of the times the baseline will depend on when what we understand. I don't have the baseline on it's not actually most common on other pattern on other trading platforms. So on MT5 you may not see it at all. On MT5 I don't think it's there. Let me check, but I've never seen it on MT5. It's only seen on this other trading platform, which is Trading View. Let me check here. Yeah, on MT5 we only have the bar chart, the candlestick, and the line chart. That's the only chart types I can see here. So for these ones, they can only be seen on this other side. Then there's another one which is called Helkin Ashi. It's another chart type. Never used it, never taught it to anyone. I don't know it. You may it's somehow different from the normal candlesticks we have, but it's almost like candlesticks. So that is Helkini Ashi. If I change to candlesticks, you'll see the difference. You'll see the difference. These are the candlesticks here. Let me change to Helsini. You see the difference that is happening there. You're seeing the difference now. But it is also there. It is also a chart pattern found on TradingView. All right. Any questions so far on these chart types? Hello.
Okay, hello.
Yes, Davis.
Yes, sir. Maybe what I just wanted to ask is it the trader who determines the mode of chart to be used, or there are other technicalities involved?
No, like you've seen, I'm having like how you've seen me explaining. I have uh, an obligation. It's my own choice to change to whatever chart type I want to use. Are you understanding? So,
Yes, sir.
but it also depends on which trading platform you're using. So, like I've told you, MT5 doesn't have what? Doesn't have all these other, all these other assets. I mean, all these other chart types. Let me share with you MT5 here. MT5 is here. So, looking at MT5, it doesn't have these other chart types. It only has line chart, like you're seeing line chart. It has candlestick chart, and it also has the bar chart. Only those. It doesn't have these area. It doesn't have the hell kishes. All those it doesn't have. So what we can see is only these three. But like I said, the commonly used chart type is candlesticks because it is easier and clearer to use it in analysis. All right. Any questions? Any more questions from you guys? Any questions?
That's so good.
So far, so good. All right.
Maybe before departing from this point, Mr. Coach, I wanted to ask,
mm,
when somebody says opening price or closing price, what are you actually talking about? Is it the market you begin with, the market you end with, or what?
opening price. Let me go back to this. Present something else. Opening price. What we are talking about here is so opening price. What we are meaning here is if I'm in H4, the time frame. Do you understand this? Are you seeing where my cursor is?
Yes, please.
Yes, these are time frames. We have 5 minute, 15 minute, 1 hour, 4 hour, 24 hour. It means if I'm now in H4, in 4H, it means every candle here you see, it represents 4 hours. Are you understanding? Every candle
Yes.
here. This, like for instance, if I can mark this candle here, and I go to 4 and I go to, I don't know if it will be able to do that because it's not actually doing what, it's not only marking the candle that I want, but I will be able to see it. But if you see that candle there, the green one, if I change to MH1 and I look for it, you'll be able to see that there are actually 4 hours marked. Right now it is going to show you more because it was not able to catch only the ones I wanted, but they are supposed to be these ones. 1, 2, 3, 4. This should be out. So if I go to H4 again, if I go to H4, it should be able to show you that candle only. This candle should be the only one marked. So meaning every candle you see, you must look at the time frame and know, okay, this is a 15-minute candle or this is an H4 candle, meaning I have 4 other candles of 1 hour, 1 hour, 1 hour. You understand that? So if you're asking for an open price, now that you've known that this candle is 4 hours, it means the opening price is the price where that very candle started from. This This opening price is the price at which that candle started from. So if you look on the left and you go to that level, you will see that I want to mark it here. Let me mark it here. Where is my thing? Horizontal line. I want you to see I'm marking from that level there. If you come on the left here, I mean on the right, you see the blue numbers. There are numbers in the blue kind of box. You will see 2118.7411. That is the opening price at which this candle started from. Are you understanding that?
Yes, sir.
Yes. Now, if we say closing price, of which our closing price is above here on this very level, then you will be able to see that our closing price is actually 2134.994. Are you now getting why we are calling it opening and closing price?
Yes, please.
Means the candle started from that very level and it closed on that very level, on that very price. So hence calling that the level the closing price. Is that
Oh,
clear now?
it is clear. Thank you.
All right.
Mm.
Any more questions? We we've gone into 10 minutes past our normal time. Any questions?
We are clear, coach.
Judy, any question? Are you okay? Should we call it a day?
Um, it's not so okay. Okay, this week where the week was
Uh,
created, it is up to where the market had gone,
yes. The
and
week
then it.
the week the
Okay.
week signifies the rejection in the price. So market,
Okay.
this candlestick was trying to move all the way down, but
To sell.
it failed. So it found some rejection down here. So market, the sellers pushed this price all the way back, but as they pushed it, it also reached our opening price and continued to buy. So the buyers started to do what? To take position, and market later closed on that level. You understand?
Oh,
So
so the buy.
these are the buyers trying to
Mm,
push price. We started the candle from here. We were supposed to buy, but sellers
mm,
came in. They tried to push price all the way down, but buyers refused and said, no, we are still having momentum. So they pushed price back
eh.
up. So that's why you see the
All
wick.
right. Okay, good.
Then
Thank you.
on the other upper side, price went all the way there. The buyers were still having enough momentum. It tried to push it all the way up, but it found a resistance. So from this level
Mm,
here, it found resistance from the sellers. Now sellers, when price reached there, sellers said no. We also want a share of this market. They started to push price all the way back down. But
Up to the 4 hour.
yes, they
Until the
stopped it.
4 hour
Yes,
closed.
they stopped from here until the 4 hours closed.
Okay, all right.
So
I'm okay.
you're okay. So depending on the time frame you're in, now we are in H4, but even if you go to H1, it is the same thing. You understand. You need to understand that if you're probably on this very candle, price started from there. We are selling, so the market, the opening price is up there. So the this very hour started, the buyers tried to push the price, but their seller said no, we still have the momentum. Then they pushed the
To
price all
sell.
the way down. When they reached on that level, buyers said no, we want some share of it. They tried to pull it up, but they failed, and the candle closed.
Then
Another one
closed.
started. So
Okay.
that's
Oh,
basically it. That's how market moves, with
mm,
opening
thank you.
price, highs and lows, and closing price. Don't forget this. Price moves with opening price, with highs and lows. Where did I put it? I'm not seeing it. Let me go to H4. Probably I will see it. Or HLC. Don't forget this very term here. Open,
Oh,
high, low, close. That's
close.
why. That's how the market works. All right.
All right. Thank you.
All right. Right. So, guys, if there's no more other question, I want to call it a day. I will give you a homework again as usual. Right now, I want you to go and look for, everyone is going to research for me three chart patterns. I repeat, everyone will tomorrow will be presenting for us three chart patterns, because tomorrow we'll be starting on chart patterns. All right. I hope that is very clear. I hope, Davis, you've noted that. We'll be presenting chart.
Yes, I've noted.
Yes, chart patterns, not chart types. We've finished chart types. So tomorrow I will be looking at chart patterns. So every one of you guys will look for three different chart patterns, and we'll look at them. All right, let me wish you guys a good day, good evening actually, and let me say have a nice the rest of your day, and God bless.
Thank you. Thank you. Have a good evening. Oh.